Well, good afternoon, everyone. Welcome to our webcast on long options. I'm Connie Hill. I'm happy you would join me here today. You know, if you think about kind of the calendar and how the seasons play out, how would you think, say, the months of November and December fare historically? Okay, I think they're very bullish months, fairly bearish months. Well, I'm here to tell you that they are actually, both of those months are pretty bullish. That's going to give us some guidance as far as how we choose to trade some long options here today. Now, I'm joined in the chat by Cameron May. I'm glad Cameron's here. He'll pick up some questions if I can't get to them or they're a little bit off base. He'll help me out there. Many times I need to answer your question, but feel free to ask it. Go ahead, chat it in. If you're listening to this on the recording, and I know lots of you do, when you have a question, put it in the comment section. I go back and look at those throughout the week so you can get your question answered pretty quickly here as well. Now, I hope you're following me on X. There's a lot to post about this morning. My handle is @ConnieHillCS. Cameron does some great posting as well. He is Cameron May CS. So it's free to do. Just join X, go ahead, follow us, and get in on the little tidbits that we share with you throughout the week. Let's go through our disclosures and let's get down to business. I have a pretty busy agenda for us today. All right. Options carry a high level of risk and are not suitable for all investors. What we talk about today is intended for informational and educational purposes only. Don't consider it a recommendation. We will be using the Paper Money software application. This is the software you download to your computer. It's the most robust version of thinkorswim. There is no guarantee that execution of a stop order will be at or near a stop price. Past performance of any security or strategy does not guarantee future results or success. All right, I'm going to hype a couple of our events coming up. So one here just in a couple of days, actually tomorrow. Tomorrow's Friday. That first event in Miami, if you're anywhere near there, get yourself over there. Or if you're near Orlando or Houston, and you can get yourself there, it'll be well worth your time, okay? And then if you do go, I'd like you to tell me in my X, say, hey, I went to Orlando or I went to Miami or whatever the case may be. Let me know, because I think you'll really enjoy it and appreciate it. These workshops are based on technical analysis one day and then option strategies the next day. So, of course, we do options in this class here, but we need technical analysis to help us with our strategies. Whoa, I don't know why that went a little weird on us. Let's try this. All right. In our class, we always talk about just a little bit of conceptual what are long options. I think long calls especially are something we can relate to when we're first introduced to them, because we're thinking, oh, when you buy a stock and we like the stock to go up, oh, we buy a long call, oh, we like it to go up as well. And with a long option, there are many factors that we want to look at, but the really key ones are price, time, and volatility, because those are the things that impact the price of an option quite heavily. Okay, we're going to do lots of example trades. We're going to do a follow-up on a couple of existing trades that we need to manage in our account, or actually kind of managed earlier today. Now, lots of people are joining us all the time that are new. Okay, I want you to make sure that you know what these long option strategies are about. Even if you might not be at an intermediate level or feel like you're there, I do want you to understand. So long calls and long puts are an option strategy where we expect the stock to move. In fact, we need it to move in order to be successful and make money on the trade, generally speaking. Typically, we need the stock to move a certain distance by a certain time in order, before it expires, in order to even make money on a trade, okay? The positions are typically what we call theta negative, which means time decay hurts them. You know, that's part of an element of the price of an option, is that piece that's in there for time value. And every single day that that option exists, including weekends, including holidays, there is some time decay. And that's one of the reasons it's so important that we're focusing on stocks that appear to be moving, because it'll be a little bit more beneficial for this type of a strategy. They can also be what's called a vega positive, which means if implied volatility goes up, Vega is the Greek that applies to implied volatility. That means that potentially that rise in volatility could help increase the price of the option. Now, if we're long option holders, we like the price of the option to go up. All right, that can work in our favor, but if the volatility drops, yeah, that will also impact the price of the option as well. You need to know that you could lose money on these trades, right? Every single one of them. The most you can lose, however, is your max net debit. Just whatever you shelled out for the price of the option, that's what you could lose. All right. Let's see here. Let's jump over to thinkorswim. And let's take a quick look at the markets. Hopefully you know what's been going on in the markets. Earlier today, the NASDAQ and the S&P were down, but not so much anymore. They finally got on the same wavelength as the Russell 2000 and the Dow, who for the most part have been up all day. But the S&P is the one that many traders will focus on because it gives us a good gauge of the overall market, right? If we're focusing on those 500 stocks, the Dow's a little bit more narrowly focused, right? Only 30 stocks. So that's why people have a tendency to use the S&P 500. Blue line here is our 10-period moving average. Red line here is our 30. Okay, so a short-term moving average, an intermediate moving average, although I'm going to say it's kind of in the quicker range, meaning sometimes people use a 30, sometimes maybe a 40. A 50 is very common as well, and so it's kind of at the low end of that range as far as time, and so it's going to be a little bit more sensitive to the intermediate trend than, say, a 50-day moving average might be. Now, I do have at the bottom the MACD. We may consult that once in a while. Remember, the MACD has a zero line, and when the momentum really shifts above that zero line, that's when we get these green bars. And the bright ones are as it's growing. The darker green ones are the momentum still bullish or positive, but it's starting to drain off, right? These darker ones are that it's getting a little bit lower. We call that rolling over. The red lines, when they are down below zero, give us an idea that maybe that momentum is pulling to the downside of things. And the deeper those lines go, the stronger that pull is. Same on the top side. The stronger those green lines go up, or the further they go up, the stronger the momentum is at that time. So this is what the S&P is looking like. Let's take a quick look at the NASDAQ. And like I said, it's off its lows from where it was earlier today. In fact, it came right down here. Look at this. And just kind of hit on that diagonal support and going back up it again. And they easily went back above the 30. And who knows? We've got a little bit more time till the market closes, and maybe it'll go above our 10-period moving average. That's yet to be seen. Now, I want to first take a look at a couple of our trades because they will set the stage kind of for what we're looking for. All right. So first trade we're going to take a look at is one that we got out of pretty quickly. This ticker symbol is YPF. And typically I'll mark on the charts. What was the day that we got in? What were we seeing here? Okay, so this was just last week in our class. This is the one I did my best Spanish pronunciation to you because it is a stock that's a foreign stock, which they do carry a little bit more risk. You want to be aware of that. And so when you see this little ADR after the name of the stock, that lets you know that's an international stock. And you just want to be aware of that. You know, there are a lot of South American stocks, there's a lot of European stocks, and of course, a lot of Chinese stocks. And so since there's that extra element of risk, you want to be aware. Now, we got in here just kind of like a little short-term breakout, all right? This is the day we got in. We weren't in a whole long time. We got in on the afternoon on a Thursday. It moved a little bit up on Friday, and then on Monday, moved up quite a bit, and we hit our target here. Our target on this, we were looking for the stock to either hit as a stop loss or to hit a target of $35. Well, on this day, sure enough, looks like the high price was $35.67, and so got us out of the trade. Return-wise, we ended up with this one with about a 90% return because we paid for the option. We paid $230, and then when it executed our trade, we'll just take a quick look at it on YFP or YPF. We got in at $230. 3 trading days later, we got out at $440. And so that worked out to be at about a 91% return. Now, if I were going to say what kind of scenario we would like to look at, if you were a long call trader and this happened to you on every single one of your trades, I think you'd be a happy camper. Now, it's not realistic to happen on all our trades, and you've seen plenty of times trades don't go our way necessarily all the time, right? Sometimes they just don't. They don't do what we think they're going to do. And that, if that happens to you, it doesn't mean you're a bad trader or you don't know how to read the charts. It's just that, stocks sometimes will act differently than we think, or some news will come out that negatively impacts it, and it does the exact opposite of what we thought it might do. Now, the next one I'm going to show you, Mike wants to know, how did YPF even come across my mind to look at? Great question, Mike. I will tell you a lot of the trades that I bring to my classes, especially if I'm looking for bullish moves, I get from one of my what do we call these guys? Scans. I get from one of my scans that I run about every single day. And when I'm not teaching in the morning or have a major responsibility in the morning, I like to share those with you. Share the results, maybe if a sector's stronger. Today, the one that I highlighted was consumer discretionary. Over the last month, it has been one of the better performing. It's actually the best performing sector in a 1 month. And so I chose to focus on some of the stocks that were popping up in that scan. Now, the question always is, well, how can we find the scan? Where is it? I'll put a link to it in our show notes at the end. I'll put a little link in there. I taught it about 2 weeks ago, maybe 3 weeks ago. And so those of you that are interested in that, I'll put a little link out here. In fact, let's see if I had one out here. I guess I don't anymore. I think I had at one point a URL for that I could share with you. Don't have it right at the moment, but that's where I get a lot of these. In fact, the ones we're going to look at today, very same scan. All right. There was another question that we had here that said, is there any risk in going long an option 100 points out of the money? Is there any risk? There's always risk. Anytime we do a trade, there's always risk. You're saying in going long in an option that's 100 points out of the money, well, it must be probably something that's very expensive to be 100 points out of the money. Maybe it's a $900 stock and you're looking to go maybe an 800 strike price or something like, or a 1,000 strike price. 100 more than whatever the stock actually is. And so, yeah, there's going to be risk. And it really depends on how big of an expectation you have for movement in the stock if you would want to go out that far out of the money. Okay. You could incorporate other strategies that we don't talk about in this class, like, say, a long vertical. You have some trades in some of these really expensive stocks, and you're like, man, one contract's going to cost me $3,000. You're like, maybe your account isn't appropriate for that, but you still like what you're seeing as far as the setup. And so you might utilize some other strategies to lower what that net debit happens to be for you. Okay. We don't get into those in this particular class. We only stick with long options. Okay. The other trade I wanted to find you or show you. Oh, there was one more. Mariana said, could you show us how to create a break-even exit on a trade that is on the positive side? We're actually even going to talk about that today, Mariana, in the next stock we're going to look at. The other trade that we had last week that we put on, we actually went bearish on it. The market at that time had maybe started to pull back a little bit, showing a little bit of weakness, certainly not a different trend. It was still a bullish trend. But we found a stock that had been really weak, that had been downtrending for a long time. That's this TMDK, Transmedics. And what we saw here is they dropped down at earnings and they had continued to drop. They tried to rally a little bit here, we can see. I'm going to zoom in here. And then as it bounced down here and gave us a low below the low of the high day, that's where we took our bearish entry. Now it dropped a couple times. Our initial stop was just above the high of this day. High here was 92.84, and I don't think I have it in front of me. Yeah, our initial stop, I think, was $90, $96. Okay, and that was fine for a couple of days, but then as the trade progressed, we needed to make adjustments. It dropped a little bit. That was nice. It ran up a little bit here, and then it dropped again yesterday. So we were doing pretty decent in the trade. And so early this morning, we moved the stop. We moved the stop to be just a little bit above the high of yesterday. The high was 81.09, and we put our stop at $80.80. Okay, with the idea that, hey, let's lock in some profits. If the whole market changes on us, it could suck up a little bit some of these stocks that have been downward trending. You've probably noticed that sometimes the majority of stocks will go up even if they happen to be downward trending. And so we made that adjustment, and it stopped us out before our class started. Okay, we still ended up with a decent trade on it. Let's go to our account statement. I'm going to pull up TMDX. All right, so here's our trade history. We bought this for $10, essentially. And one was 10, one was 10.05. And then we got out when it stopped us. When that order kicked in, it looks like it kicked in about 11:30 my time. And so it stopped us out about 14:45. So did we lock in some profits there? Yeah, we did. Was it as much as last night? No, it wasn't, because the stock ran up, but we still ended up making on that trade about 43%. Okay, so first trade 91%, second trade about 43%. And so those are, I'm going to say, common numbers. If a market is trending and you pick a stock that's trending, kind of in sync with the market, like that first trade was, yeah, those can be some, I'm going to say, decent percentages if the stock performs just the way we'd like it to, and it does it quickly, right? Because we don't want time decay wearing on us, and the longer we hold it, the more that time decay hurts us. Now, the question that came up here, and I said I'm going to show you that, was how do you make, how can you basically change your order to a break even? Now, I'll show you what I looked at earlier today. The price of this was based on, let's go back here to the order, and let me click on here. When I adjusted the order of our stop here, and I said, hey, we're going to take it to 80.80 earlier today, the price of the stock at that time was in the neighborhood of, we got filled at 14.05. I think it was in the neighborhood of 15 or 16. I can't remember. But when I pulled it up, I compared it to what was the original price of the option. Okay, and I saw the original price of the option was 10. And so if you were trying to do something where you broke even, like maybe the stock had made a move and you said, oh, I want to kind of break even, instead of using a dollar figure on the stock, we could have used the option price. Okay, we could have done that just as easily. And that's how you could, if you wanted to, say, hey, if it executes on me, at least we're breaking even, not counting commissions or anything like that. But you're going to focus on what the price of that option was. So hopefully that answers your question. Well, I think I've got a couple more questions out here that you guys need answered. Nirmal had asked what was the theoretical loss. The theoretical loss would be the cost of the option. Yeah, our theoretical max loss is whatever it was that we paid for the option, not including commissions and fees. All right. Let's see, for checkout, what are you looking at here? How do we set up the scanner to pull up price action? When you say set up the scanner to pull up price action, are you talking about movement in a single day? Are you talking about a series? We may, tell you what, I do want to show you some examples. And maybe what we'll do is we won't do our last example trade if we don't have time, and I'll show you that scan because I think some of you are having some questions about that. Bob said, is it better to try and wait for red days or price action to settle down before getting in on a long call? I feel like if I buy a call on a big uptrend, the premium is just inflated and it's easy to lose. That's a fantastic question, Bob, and I think that really goes back to what do you like to use as entry signals? Let's pull up our first example and we can kind of talk through it a little bit here. I'm going to open up my watch list here because this is where this stock came from today, our early morning movers scan. And in my columns, and I've shared these formulas with you in the past, if you need them, tell me, I'll copy them out in the chat again. But they'll be down here in the scratch pad, okay? We have a calculation for a week, a month, and 3 months. And when we're looking at maybe using long options as a strategy for a swing trade or a quick moving trade, it's nice if we can see that they're up in the month. And just kind of for interest purposes, I put up there, what is it doing this week so far? Week might be a little bit myopic, but it kind of gives us an idea of what's been going on with the stock so that you have an expectation. I think that was for checkout. It was either for checkout or for Bob. No, this was for Bob. That is it realistic to think maybe to wait for the stock to come back? And sometimes it might be. Or if you're a little nervous about getting in because it's already at a high, which is kind of what your concern was, then you can kind of see, well, how has the stock been moving? Did it just have one big day, but usually it doesn't move a whole lot? And so that's what these calculations can help with. Okay, so like on this stock, it's already moved 41% this week. Holy cow, that is major. And it's up 66% this month. And you're right, some of these stocks, they might be higher. And so that's why we go back to, is it a breakout entry? Is it a breakout out of a flag entry? Is it breaking out above resistance? Is it bouncing because it's pulled back? Okay, we're looking for those typical things, or is it in a price pattern? Sometimes we'll see stocks in a price pattern beyond a flag, might be a triangle. And when we see a breakout, that may be the time to enter it, even if maybe the stock is trading a little bit high. I'm going to just draw on the screen for you here, a very crude drawing. But, sometimes you may have a stock that's kind of hitting resistance here, okay? But the lows keep climbing. They climb higher and higher and higher. And then when it basically breaks above this resistance, that's the entry point on that ascending triangle. There's actually 3 entry points. That's going to be the first one that most people key off of is on that breakout. So in that scenario, yeah, you're going to have some stocks that might be at highs. Now, as we look at this one, some people might say, oh yeah, maybe there is some horizontal resistance here. I don't see it being all that strong, okay? What I see more of it being is that it just kind of broke out beyond this kind of little high point here, right? Because it had this touch here, it didn't close there. Well, it closed higher, and then it tried to get over it right there, didn't quite do it. So is it short-term resistance? Yeah, so we're looking at this as a short-term resistance that the stock is breaking through today. We see lots of nice extra volume in here. That line is my average volume, and then this really push higher on the MACDs, letting us know the momentum's really swinging to the upside, okay? So you might be a person that's concerned about that. So what we're going to do on this trade, there's a couple concepts I want to teach you today. One concept is how do you have multiple targets on something, okay? So we're going to have 2 targets on this stock. Let me collapse our watch list there for a minute. And I'm going to copy out in the chat, for those of you that don't have it, those 3 formulas, okay? And have to make sure it's not taking up too much room. Remember, anytime we share a script with you, it's not guaranteed as to accuracy or timing. Values can continually change. And in fact, on these particular ones, man, they're just updating all day long, okay? All right. So on this, it's kind of like, well, it's kind of actually at a high point. Many times what I'll do is I'll go back and I'll say, well, where's the stock been on a 3-year chart? Oh, look, this stock hasn't been around that long. This is a 3-year chart. And we're seeing that this stock started trading in May. So it did have a higher point right here, this 37.51. Okay, so we're going to acknowledge that. Oh, let's keep it back on 6 months. And recognize, yeah, it did go up there once for just a little bit, and then it dropped back down on that day, right? But maybe, we might use this kind of area as maybe a target of some sorts. Now, the stock has continued to run more than it was earlier today, like significantly more. That might scare some of you off. This is what we're going to do on it, though. We're going to have our very first target at the Fibonacci level, okay? Fibonacci's are sequences that we find in nature and stock patterns, and so we can use this sequence of numbers to help us maybe identify a potential target. And so what I did here, let me just remove this, and I'm just going to redraw it. I picked a high point in a move. Okay, how do you know it's a high point? Because it has something that comes down under it. So for example, this is kind of the high point of this move. And then I'm just going to draw it down on something that's upward trending. I like to start at the candle that's at the top so our projections go higher. And so we had come down to this low right here. Okay, so the Fibonacci is showing us retracement levels within the 0 to 100%. 0 just means it's back at the bottom. 100% means it's just right at the top of that move, and then it projects out. So this is giving us a projection here about 34.66. And that's pretty close to what I was going to have as our first target. And so what we're going to do, we're going to put that as our first target. And guess what? We've got an even further level out here, but I'm going to say that's pretty aggressive, okay, to really put that as a second target. My thought was on this one, what we might try is maybe having a second target that maybe was midway between these two, and so if this, hit its targets, we're going to put a 34 here. What if we did something like a 30, let's do $40. Okay, we're going to do $40 here. So I'm going to write it down to help us remember. Okay, so T1 is going to be 34. Okay, we'll leave off the cents there. T2 is going to be, what did I say there, about 40. If you wanted to go a little lower than that, you wanted to go to 39.90 or something a little bit off of that amount, certainly you could do so. All right. We'll just take it at an even number here for both of those targets. All right, next up. The other thing that we want to do is put a stop on this. It's up really considerably this year and really considerably right now with the move it made today. Many times the midpoint of a large candle will act as support. And so if you only wanted to take that much risk, like a half of a candle, somebody could put it in for that. What we're going to do in our case, we're going to put a stop just a little bit below this 100% area. Okay, so the 100% looks like it's at 27.75. So we're going to put our stop at 27. Let's go 27.55. Okay, this is pretty aggressive. This is something that not everybody's going to feel comfortable with, okay? And that's going to be our stop. So how do we do this? All right. One, if we're going to have a target up here, we're going to need some time, right? As opposed to just getting something really short, we're going to go out in time a little bit. We're not going to totally treat it like a stock substitution, which sometimes people might do with options, even though it's not really a substitute because you don't have stock ownership rights. But we're going to come out here to the January options. Now, some of you haven't even started your Christmas present shopping. You don't know you're getting Cameron and I for Christmas yet. So January might seem a little ways out there, and that's fine. okay, because we want to give it some room. We don't want theta decay to come in. And if we know that some of the better months in the markets are November and December, we might want to give it an opportunity to maybe hit the first target and have an opportunity to hit that second target. Although we're not planning to hold on till January 17th, but that's how much time we're going to buy in this first one. Okay. We are going to buy here, stocks at 30 and change. So we're going to use the 30 strike price. We're just going to go at the money here. We're going to do 2 contracts so that we can have those 2 targets. First contract hits target number 1, we're out. It's target number 2, we're out. Okay. Next, let's see how we're going to do this one. Let's go. First triggers OCO. One cancels other. Let me think of the best way to do this. We're going to do, no, we're going to have to do this in 1 contract increments. Okay, so we'll set up the first one, then we'll do the next one. We'll do a first triggers sequential, which means, hey, this first hour order has to go in before the second order is even considered. Okay, so we're going to create an opposite order here. And actually, I should have picked first triggers OCO. Sorry, I picked the wrong one because we're going to have a couple of conditions. And let's create a duplicate of this. So we've got our buy order, we've got our 2 exit orders. One we're going to configure for the first target. So for the first target, we're going to change this to a market order. And let's go ahead and fill our stop out right now. Okay, we're going to do it as well. Both of these we're going to make good till canceled. And let's go fill in the conditions for it. All right. So condition number 1, we're going to act as our target number 1. Okay. So on target number 1, we're going to say if the price of the stock gets greater than or equal to 34, get us out of the trade. Okay. If the stock gets down to a price of, let's go here, less than or equal to, and we said we're going to put a stop at 27.55. All right, that's how we're going to configure it. Okay, so 1 contract, first target, and then the stop loss if it goes below 27.55 based on the price of the stock. You could use price of options there. We're using the price of the stock. All right, so this is going to be our first one. All right, we're going to hit confirm and send. We're going to send it to our long options bucket. And then we're going to do second order. And basically, we're just going to buy another one. Looks like the price is dropping maybe a little bit there. Maybe we could get in a little bit easier at a near the midpoint price. We'll try that there. And on this one, we could actually do it. I'll do it the same way, but we could be a little more efficient. But let's go ahead and say first triggers OCO again. Create 2 opposite orders. First one, we're going to put for the second target. Second, we're going to put for the stop loss. Okay, based on the price of the stock. So good till canceled, good till canceled. And now let's go put on the condition. All right, so second target is what? Okay, do you remember? Second target is going to be about $40. So let's go ahead and put it in. And it has to get greater than or equal to $40. Rate, we've got that one in place. And just check your greater than and less than signs. Just make sure they're going the right direction. Greater than or equal to 40. And then on this one, we're going to use the very same stop loss. Okay, so we're going to say this gets less than or equal to 27.55. Then we want to be out. What's that going to do? If the stock really drops to 27.55, we're going to get out of both of these. Okay, it's going to trigger them right together. Remember, when it triggers, it's going to do a market order. We don't know what the price would be at that point. All right, so we've got both of those set up there, and we're going to track it. We're going to see if we get to our first target. We're going to see if it takes to the second target. And it may take a little bit of time to actually, hit one or both of those targets. Okay, we're going to throw that in our long options bucket. There we go. Let me answer a couple of questions for you here, okay? Let's see, Bob is saying, happy to have those scripts as part of our discussion and how to use them. And he said there's a lot of ticker symbols like NNE where I look at it and it's just very hard to read. When you say very hard to read, do you mean reading what you think the stock is going to do because it's up high? Or when you say it's very hard to read, you're not talking about my screen and the size on my screen? Okay, give me a little bit of clarification there, if you would, there, Bob. Why did I pick the 161 fib for a target instead of the 1.727 or 1.414? What big P is referring to here, these are actually some additional Fibonacci levels that we could have added, okay, for some additional potential places for the stock to go to. You certainly could do that. I didn't want to take the time to do that because I had a lot of things I wanted to show you here today. How do we know when the profit when using the price of the stock? When you're pricing it, okay, so you're saying, hey, if the stock gets 234, how do we know what the price of the option is? We can use the theoretical calculator. You can use that to put in what if scenarios. We've spent a whole session on using the theoretical calculator. If you're not really sure what that is, where to find it, we have to choose a column called Theo price. So I'll change my layout here. And we're going to do customize. And I'm going to pull up Theo price. Theo P. Theo, let's just scroll down here, Theo price. When I select Theo price as a column here, it added this field right here. That wasn't sitting there before, but it's a little calculator that comes up and you can put in your assumption. Assume the price of the stock goes up X dollars, you know, say you're saying $3, and it does it by X date. All right, let's say, because we're already in November here, let's say here is like December 2nd, okay? And then if you think there's a good reason to adjust implied volatility, do it. If you don't have a good reason to adjust it, leave it alone, okay? And this gives you a theoretical price on every single option in the whole chain, okay? So if the stock did that, what we're looking at here, with the parameters in the calculator, and again, it's just theoretical, it's just ballpark, it's not set in stone, okay? But then it's saying, well, if it did that by that time, maybe the value would be close to $6, okay? So you can go in and play what if on the price of putting your assumptions to see what the price of the option could possibly be. All right. Now, Josh says, you know, if it's a breakout, as if it's a breakout or just an up on news. Well, a stock can definitely have some good news that causes a breakout. Okay, so even though there's news, that doesn't nullify the act of it making a breakout. That's actually just the catalyst for the breakout. Okay, if that makes sense to you. All right. Cameron's helping us out there. Thank you, Cameron. Let's move on. Okay, want to do another one. Some of you might not want something quite so volatile. Maybe you're looking for something a little bit tamer. The other thing I was going to show you and look at, the beta of this stock. We've talked a lot about beta in this class because, you know, if you want a stock that really is moving, you might look for a higher beta. Remember, how do you compare this? A beta of 1 means an average stock on the S&P 500. Something bigger than that means more. If this was a 2, it's 200 times. So what's this one? This is 300 times. So this is not for the faint of heart. This is not for people just cutting their teeth. But if you're looking for a stock that may move, you can practice with it for sure. Okay, that can be one of the factors you look for to help you know, beyond looking at the calculations, if a stock is moving right now. Okay, let's do one that's a little tamer. Okay. And the one that's a little tamer, let's go ahead with, this seems to be a little tamer. Let's go CFLT. Again, this came on our early morning mover scan. And so you can see this maybe a little bit better here. Look at that. Again, another breakout right there about 29.5. That's where some old resistance was. There's another high clear up here at about 34 as we go back in time. And then, you know, we can see this kind of peak here at about 32. Okay. So we're going to put, again, two targets on here. Target one is going to be 34.50. That's going to be this one up here. The next one is going to be around this 37 and change. Okay. Is that a pretty hefty target? Yes, it definitely is. And some of you might want to see, well, what did the chart really look like there? We can go back 3 years and you can see this is where it peaked out here in July of last year. So about a year and a half ago, kind of got into that range. Okay, let's go place the trade. And I do want to show you that scan real quickly here as well. So this may go a little bit faster. We're going to use January options here as well. And we're going to say, we're going to go just at the money. We're going to go, in fact, you could choose, it's right smack in the middle between 31 and 30. You could do either one of these. We're going to do 30. And again, we're going to do two contracts. Well, we're going to do one contract at a time, but we are going to do two contracts. And so let's save ourselves a little bit of time and let's say buy custom with the OCO bracket. So it sets it up for us. We'll get in on whatever the price is. Same thing here. We're going to change this to a market order. We're going to change them good till canceled. And then we're going to put the condition on there. So the first condition is giving me our first target. So we're going to say if the stock gets greater than or equal to target one, which I told you would be 34.50. We'll go ahead and put it in here. We could, if we wanted, add this little piece in here as well and put both conditions in here. Okay, so I'm going to kind of change this a little bit. We're going to say, and this one gets less than or equal to, and that stop is going to be, oh, I didn't write this stop down. Let's go, I'm going to hit cancel here because we have to figure out the stop. Initial stop probably could be just a little bit below 29.49. This should act as support for the stock. It's not guaranteed, but it should. Okay, so we're going to put the stop here about, let's go a little bit below that 29.49. Let's just take it down to about $29. Okay, so this is going to be on that second stock. So we'll go back here, we'll do the trade, and we're going to say, put our first target in here. It gets greater than or equal to the 34.50. No, just 34, yeah, 34.50. And then if it gets less than or equal to, now we have our price, 29. We're going to go ahead and put it in. Going to go ahead and send this off, and this is for one contract. And I'm going to have to do this second part of the trade after we finish up our class, okay? And all I'm going to do is I'm going to put in one more contract. We're going to use the same entry price. We're going to have our second target, which is going to be at 37. We're going to use the same stop loss, 29, but we're going to inch it up. All right, we're going to inch it up. If there's a significant amount of gain that you're ready to inch it up and try to maybe say break even on the first part of it, okay? But you would adjust both of those stops, okay? One for each contract. All right, let's jump over to, let's see, what did it not like? Well, it must have a daytime order. Oh, I know why. This is a duplicate. That last line, because I stuck them both under the gear, right? I put both of the conditions there. There we go. So we're going to change this to first trigger sequential. Now it'll take it. It'll be happy now. And it's letting us know that it's going to trigger a market order and that price isn't guaranteed. Now my time is actually up. Okay, so this is what we're going to do. We're not going to have time to show you that scan. However, I'll put it in the notes after when we're finished recording. I'll go ahead, I'll put it in those notes so we have you have access to it, okay? And also go ahead, follow me on X, and then you're going to be able to see the different things or you're going to be able to see some of the results that are coming out if you're following me on X, because I post about it, okay? All right, you guys, you've been great. You've had good questions. Remember, these are stocks we're looking for a move, okay? We're looking for them to not dink around. That's why we're looking for stocks that are really on the move. The first one was a really extreme example, not for everybody, very volatile. Second example, a little bit tamer, but still, you know, it's moving along fairly aggressively this last month. All right. Coming up next is Brent Moores with gettingtoknowschwab.com. Those of you that have that as a new resource, that'll be really helpful to you. Make sure you're following us in our Trader Talks YouTube channel. Click on that little blue icon down there that looks like YouTube. That's how you subscribe. Karen and I would love you to follow us. And then, of course, Brent's going to be here at the top of the hour. We'll follow up on these trades next week. We'll show you what the progress is on them. All right. Have a great afternoon, everyone. See you later.